Hello, my name's Cregan, as Linda and Meg said, and together with my colleague Jessie-Grace Stephenson, we're lawyers in the pro bono team at a firm called Gilbert and Tobin, and we do a lot of work with people with disability and a lot of work with families of people with disability, particularly around planning for the future. And we're very delighted to be here this afternoon with a group that's so engaged in making sure that you've got a really good foundation for the future of the person that you care for. Jessie-Grace, can you just go to the next slide for me, please? So what we're going to be talking about is we're going to be talking at very high level about how you make financial provision for a person with a disability. We're then going to be talking about trusts generally, because it's important to understand what a trust is before we get into the detail of a special disability trust. We'll then talk about special disability trusts, so what they are, the pros and cons of special disability trusts, the rules that apply to those sorts of trusts. And there'll be hopefully lots of time at the end of all of that for all of your questions. So as Meg said, if you want to put questions in the chat box, we'll accumulate those and we'll go through them and any other questions you have at the end of the presentation. Thanks, Jessie-Grace. So before we get into the detail of special disability trusts, we wanted just to go through with you who is eligible to be the recipient of a special disability trust, because it may be that the person that you're caring for is not eligible for a special disability trust, and we didn't want you to find that out after you'd invested a great deal of time in listening to the presentation, only to find out it's not suitable for your circumstances. So to be eligible for a special disability trust, for the law to allow you to set that up, there's a couple of things. You've got to only have one person benefiting from the trust during their lifetime. So you could set up a special disability trust to benefit Jessie-Grace. I couldn't set it up to benefit Jessie-Grace and Meg, but after Jessie-Grace has passed away, then I could say, well, okay, the money that's in the special disability trust then gets given to these other people. But if I set it up for Jessie-Grace while she's alive, she's the only beneficiary of that trust. So if you have assets and you put them into the special disability trust, they're only available for the person with the disability during their lifetime. The second thing is you can only set up a special disability trust for a person who has what's called a severe disability. And that's defined in the law that establishes special disability trusts. So if the person is under 16, the person's carer must qualify under the disability care load assessment as a carer and with a rating of intense. That's the first thing. Plus, you've got to have written certification from a doctor or another treating health professional that because of the person's disability, they'll need personal care for at least 6 months or more, and that it's going to have to be provided by a specified number of people. That's just a form that they fill in. And the third thing you have to have all three of these things. The carer has to certify in writing that the person with the disability will need the same level or more care in the future. So unless all of those three things are in place, can't set up a special disability trust. If you're caring for somebody who's over 16, the person has to have a level of impairment, which means they qualify for the disability support pension, or I won't go into the detail around veterans pensions, or they qualify for an invalid pension under the veterans pension scheme, or income support supplement on the grounds of permanent incapacity. And there are tests for that in the Social Security law. Plus, they have to have care needs, which means their carer qualifies for a carer payment, or if they don't have a carer, they live in accommodation for a person with severe disabilities, which is funded by the Commonwealth or part funded by the Commonwealth. Plus, they must not be working or be likely to be able to work for the minimum wage for more than 7 hours a week or be participating in a supported wage system. So all of those things need to be in place before a person is eligible to be the recipient of a special disability trust. So if you're caring for somebody and you think that the level of their disability would not meet that quite high test, you can't set up a special disability trust. So we just wanted to make sure people were clear on that at the start, so that if anyone, if it was not relevant to you, you could drop out now. Thanks, Jessie-Grace. So if you're caring for a person with a disability and you want to give them money either during your lifetime or after you've passed, There's three ways you can do that. So you can do that by way of a direct gift to them. If you give money to somebody by way of a direct gift, it's their money. To the degree that they're able to express their wishes, they can do with that money as they choose. Nobody else can control that money for them unless they agree to the person controlling the money for them and they have capacity to agree, or somebody is appointed by the tribunal, by NCAT, the New South Wales Civil and Administrative Tribunal, to manage that money for them. So you give money to somebody as a direct gift, it's their money. One of the things we used to see a lot in planning was that with the best of intentions, parents would give the money, for example, to their children without a disability to use the money for their child with the disability. And that resulted in numerous difficulties that were very hard to untangle as a matter of law. The third thing you could do is, if you're caring for somebody who would have difficulty managing their own money, but you want some money to be available to benefit them, you can set up a trust. And that's a special disability trust is just a form of trust. Thanks, Jessie-Grace. So good to understand what a trust is. So if you set up a trust, it means that your trustee is like the legal owner of the money. So your trustee, the money is in the trustee's name, held on trust for the person who you want to benefit. That person, within the rules of the trust, decides how the money's spent, how the money's invested. You can create a trust during your lifetime, or you can create a trust through your will that comes into effect after you've passed. And how the money is used is governed by the terms of the trust. So if I wanted to benefit Jessie-Grace, if Jessie-Grace had a disability and I wanted to benefit her, I could set up a trust and make Linda and Meg my trustees. They are the ones who control the money. They decide how it's invested. They decide, to a degree, how it's spent, but they can only do that for Jessie-Grace's benefit, and they can only do that in accordance with the rules that I set up in the trust. So if I said the money can only be used to pay for Jessie-Grace to go on holidays, they can't use money for anything else. If I say the money can only be invested in term deposits, they can't invest the money anywhere else. But by and large, if I gave them a lot of discretion, which I probably would if I was setting up a trust, and said they can invest the money as they see fit and spend it as they see fit, then Linda and Meg control the money. They decide how it's spent. They decide how it's invested. So I just wanted to give you a quick indication of trusts ahead of time. So the benefits are, you can provide for somebody who can't manage their own money. You can control who manages that money for them. So if money is in a trust, because it's not Jessie-Grace's money, because it's money held in a trust, the person who benefits from the trust, it's not their money. So it can never go into the hands of the New South Wales Trustee and Guardian, for example. It can only ever be managed by the trustees. It's not Jessie-Grace's money. It's money that's held in trust for Jessie-Grace's benefit. So you can determine how the trustee invests the money. So some people give their trustees very wide powers. Some people give their trustees quite narrow powers. So as I say, we've had clients who've said only term deposits, and we don't mind if that means the money doesn't make a great deal of profit. We've had other people who've given very wide powers to their trustee. You can decide in general in a trust, and we'll talk about special disability trust shortly, but generally with a trust, you can decide how that money is spent. So again, you could say, I only want it spent on holidays, or you could say, I want it spent to make sure that Jessie-Grace can pursue her interest in music, and I want it spent on holidays, and I want it spent on clothes. But beyond that, Linda and Meg, my trustees, can decide how that money is going to be spent. And it might have some tax and social security advantages. And we'll talk about that a bit more when we talk about special disability trusts. Thank you. So that gives you a sense of what a trust is. So a special disability trust is a particular kind of trust. And it was a kind of trust that was developed by the Commonwealth Government at a time when the Commonwealth was trying to develop schemes to encourage families to put money in to care for a person in their family with a disability who was going to have difficulty working or making money for themselves. So it was set up very much as a vehicle for families to put money away for the person with disability. You can establish a special disability trust right now. You could create a special disability trust right now during your lifetime, or you could create it under your will. So it's pretty flexible from that perspective. What it does in essence is allow you to put money into a trust that has some benefits that we're going to talk about for the care and accommodation of a person with severe disability. So most of the money that goes into that trust, and we're going to talk about that in a bit of detail shortly, but most of the money that goes into that trust has to be used for the care and accommodation of the person with a disability. There is now some flexibility, so up to $14,500 a year can be spent on other things, but most of the money that's in that trust can only be spent on care and accommodation. It gives you some benefits under Social Security and some benefits in terms of tax, which we're going to talk about as well. And it's, as I say, it's governed by the law. So it can be changed if the law changes. So far, the law has been changed a number of times on special disability trusts. So far, all those changes have been to the benefit of a person with disability, of the person who benefits from the trust who has a disability, but there is no rule that says any change has to be for the benefit of a person with a disability. So it's possible that in future the law would be changed and might become more restrictive or might change the terms of the trust in a way that was not what you intended. So that's an important thing to be bearing in mind. Thanks, Jessie-Grace. So let's talk about the advantages of a special disability trust. So I'm going to start with the advantages for a person who creates the trust. So if you set up a special disability trust during your lifetime, there are several advantages for you or for other close family members who might put money into that trust. So if you receive a pension or you're going to be applying for a pension in the next few years, as you would be aware, the government looks at your income and your assets in determining whether you get a pension and how much you get. And if you give money away when you're on a pension or in the 3 or 5 years before you apply for your pension, then that money is still considered as your money for the purpose of deciding how much money you get and whether you're eligible for a pension. So if I would be eligible for a pension if I had $500,000 for the sake of the argument, and I was about to apply for a pension and I had $700,000 and I gave Jessie-Grace $200,000 just as a gift, the government would think, no, that $200,000 is still Anne's. She has $700,000. She's not eligible. If you put money into a special disability trust, the government doesn't take that money into account in deciding whether or not you're eligible to get a pension or how much your pension is. So to use the same example, if I had $700,000 and I put $200,000 into a special disability trust for Jessie-Grace, that money would not be considered mine when the government was assessing whether or not I could get a pension. So you can put up to $500,000 into a special disability trust, but that's combined. So if I wanted to put money into a special disability trust for Jessie-Grace and Linda was Jessie-Grace's sister and wanted to put some money in as well, I could put 200, Linda could put up to 300, but that would be it. It's $500,000 in total. The people who can put money into a special disability trust, not everyone can. So if Meg's not related to Jessie-Grace, she can't put money into the special disability trust for Jessie-Grace. Only immediate family. So your parents, your legal guardian, your grandparents, and your siblings, they are the only people who can put money into a special disability trust for someone. So as I say, not just anyone can put money into a special disability trust and benefit from Social Security, benefit in that way with their Social Security. If you are the person with the disability, the benefits are probably in some ways a bit greater. So if you have a special disability trust and that trust money earns income, so you've got $500,000 in a special disability trust and you're earning money from a term deposit, that income is not considered your income for the purposes of your own Social Security. So there's money in a special disability trust for Jessie-Grace. She had a disability. The trust earned income. Jessie-Grace's pension doesn't suffer. It's not considered income for the purposes of Social Security for Jessie-Grace. If there is money earned by the trust, it's taxed at the rate, the tax rate of the person with a disability. So if you have a disability that's severe enough for you to be eligible for a special disability trust, you are probably not going to have any income. So you're probably not going to pay any tax on money that's in the special disability trust for your benefit. The assets of the trust up to $813,250. It's indexed to the CPI, so it changes each year, but at the moment it's $813,250. So the assets of the trust up to that sum of money are not counted in the means test. So if Jessie-Grace had a disability and it was beneficial for her to be on a disability support pension and they were considering what Jessie-Grace's assets were, they wouldn't take into account up to $813,000 in a special disability trust. If I put a house into the trust for Jessie-Grace as well, and Jessie-Grace lived there, that house is not included as an asset of Jessie-Grace's, so she could have a house plus $813,000 in a special disability trust, and it would not affect her pension at all. And that house, if it was later sold, there'd be no capital gains tax payable on that house. So those are the benefits of a special disability trust. In terms of what that money can be used for, this is something you really need to think about quite carefully, because there are very strict rules about what you can use the money in a special disability trust for. So previously, you could only use that money for care and accommodation. So in terms of payment, as I say, all but $14,500 a year can only be spent on care and accommodation. So the things that are care needs got to be something you're paying for in Australia. If you're paying for something overseas, doesn't qualify. It's got to be something you're paying for that arises as a direct result of the person's disability. It's got to be for medical or dental costs or fees in an approved residential care service, institution, hostel, or group home operating under a Commonwealth agreement. In terms of accommodation, it can be to purchase a place for the person with a disability to live or to rent a place for the person with a disability to live. It can be to pay rates, taxes on the place where the person with the disability lives. It can be for modifications, but only modifications that arise from the person's disability. And you can also use the money to pay maintenance on the property. So you can use money from the Special Disability Trust to maintain the property. You could also use it to purchase an investment property. So you could have money in a Special Disability Trust and buy an investment property, but must be rented at market income, and that rental income has to be used for the person with a disability. So you can't buy it and stick it there as a means of building wealth or rent it to a family member at a cheap rate or anything like that. Thanks, Jessie-Grace. So in terms of that $14,500 that doesn't have to be spent on care and accommodation, it's got to be spent on the health, well-being, recreation, independence, and social well-being of the person with a disability. So the sorts of things you could spend that $14,000 on are things like holidays, outings, clothes, footwear, classes that people might want to go to, computer equipment, expenses for a car that don't arise from the person's disability, household shopping, you could pay for food and groceries and things, up to $14,500 a year. So previously, you couldn't use that money for anything other than care and accommodation, and very few people were taking up special disability trusts. So the government made that change to say, well, okay, you can spend some money on other things, and that's the money you can spend on other things each year. Thanks, Jessie-Grace. So there's some pretty strict rules. There's rules around what you can spend the money on that we just spoke about. There's other rules as well. So you can only have one person benefiting from a special disability trust. So if you had two children with severe disabilities, you couldn't create one trust for both of them. You would have to have two special disability trusts. So you can only set it up for one person. You've got to use the model trust deed. So there is a deed that's been developed, which is the document that sets out what happens with the trust and establishes the trust. You've got to use that deed in setting up the trust. So there's not a lot of flexibility in the rules that govern the trust. You've got to have an independent trustee, so a trustee company or an accountant or somebody like that, or more than one trustee. So you can't just have one family member as the trustee, for example. You've got to have somebody independent or more than one trustee. There are investment restrictions. So you've got to have investments arm's length from the family. So you couldn't invest in a family business. You couldn't buy a property from a family, for example. You've got to have an investment strategy that the Department of Social Security might decide that they want to look at and approve. So as I say, it's something that's got to be a complete arm's length from the family in terms of how you invest money, where the money goes. You can't pay the family from the trust. So if you had a family member who was very handy, who was doing maintenance on the trust, you couldn't use money in the trust to pay that person. It's got to be at arm's length. Got to provide annual financial statements to the Department of Social Security. You've got to provide a tax return for the trust, and you have to provide a statement that the money you spent from the trust was in accordance with the rules that apply to those trusts. So you can't just provide any old financial statement. It has to be in accordance with the Australian accounting standards. Generally, that would mean you'd have to have an accountant preparing your financial statement for the Special Disability Trust each year. And then sometimes Social Security will conduct an independent audit. So they might contact you. They wouldn't do this every year generally, but sometimes they might contact you and say, okay, we want to see what all that money's been spent on. We want to see how the money's invested, and you need to comply with that audit. You've got to give an unconditional gift. So if you were putting money into the Special Disability Trust, that's got to be unconditional. You can't say, I'm going to put money into the trust, but only on the condition that that money is spent on something the NDIA won't pay for. The NDIS is not available for. So you couldn't put money in, for example, on that kind of a condition. It's got to be an unconditional gift to the trust, and it can only terminate either when the money runs out or when the person with the disability dies. You can't wind it up. You can't set up a special disability trust and decide 5 years later, this is all too hard and it's all too restrictive. I'm not happy with this. I'm going to wind up the special disability trust. Not allowed to do that. So there's some other, there's quite a lot of rules, as you've probably gathered already, around this, but those are the main ones to be bearing in mind. Thanks, Jessie-Grace. So if you don't comply with the rules, a few things that can happen. So the donations to the trust and the money in the trust might be considered the money of the person with the disability for Social Security purposes. They might be considered your money for Social Security purposes if you put money in so that you can get the pension. The person with the disability might lose the tax benefits, and they can look at what's been going on for the previous 5 years. So it's not just in the future, it would have implications. They might say, well, we think you've broken the rules, so we're going to take into account that money you put into the trust for the purposes of your own Social Security, and now you owe us money. So that's what can happen if you breach the rules. Thanks, Jessie-Grace. So few things to think about, quite a lot of things to think about in terms of whether or not that's going to be a useful strategy when you're planning for the future for the person that you care for in your life with a disability. So first of all, can you even do it? Is the person that you care for eligible to be the beneficiary of this kind of a trust? So do they have a severe disability? We talked about that definition earlier. So do they have a disability of that kind? Is it going to be useful to you or for the person that you care for? So if you're likely to get, if you're not thinking about your own Social Security, if that's not an issue for you, or if you're thinking about setting it up at the time you die, so you're not going to get any benefit, might not be a useful strategy from your own perspective. If the amount you're leaving is not going to affect the pension of the person you care for and is not going to really result in that person having a tax debt, probably no point to a special disability trust. There's a lot of restrictions, a lot of rules for no benefit really for the person. So it's a vehicle if either you want to give away a lot of money to get a Social Security benefit, or you want to give for yourself, or you want to give away a lot of money, and that's going to start to affect the Social Security or tax debt of the person with the disability that you care for. If neither of those things apply, it's probably not worthwhile doing. You need to think about whether or not, if you are able to give away a chunk of money, whether you want to limit how that money is used just to care and accommodation, whether you want to tie it up for the lifetime of the person with the disability, because as I say, once it goes in, it doesn't come out. Got to think about the fact that the government might change the rules, might change the trust rules, and that might have a beneficial effect. It might be to the benefit of the person who is benefiting from the trust, but it might not. It might be that at some point in the future when the government thinks, hang on, we can't afford the NDIS anymore, and therefore we're going to cut back on the NDIS. And if there's money in a special disability trust, we're going to force people to rely on that money first. I'm not saying that because I've heard anything at all that would suggest that the government intends to do that. It really is just trying to think of sort of practical examples of what might happen in future. I think that's probably the main things that you would think about in terms of whether or not a special disability trust was right for the person that you're caring for. Thanks, Jessie-Grace. One of the things we hear a lot is my child is eligible for the NDIS. The NDIS largely covers the costs of care and accommodation. Why would I set up a special disability trust? And it's a really good question. And it is something you do need to think about and that you do need to factor into, because a lot of the things that you would be paying for from a special disability trust are things the NDIS would fund for a person with a severe disability. The thing I would say about that is who knows what's going to happen with the NDIS in future and whether or not it does get scaled back. The second thing is you do actually, if you are thinking about whether a special disability trust is a good idea, but you're thinking about whether or not that would be a good idea with the money you're able to leave the person in your life with a disability, you can actually make that an option. So rather than saying in your will, I leave this money to Jessie-Grace in a special disability trust, you say, I leave this money to Jessie-Grace on trust, and I give my trustee the power to decide whether or not to set up a special disability trust. So then if you make a will now and your will comes into effect in 30 years' time, your trustees are going to be in a better position to decide whether a special disability trust is worthwhile or not worthwhile. So I would probably say to you, if you're thinking about special disability trusts after you've died, think about maybe empowering your trustees to do that as an option rather than necessarily setting it up in your will, just because, who knows what's going to change between now and the time you pass away. So I was trying to make sure we had lots of time for questions. So that gives you an overview of special disability trusts. They are quite complicated. And if you were thinking about setting one up because you thought it would be good from a financial planning perspective, I really encourage you to see a financial planner about that, because we don't have a financial planning license. We don't have a license to give financial advice. That's not something we can advise on. And it's a big decision. So if you were thinking about setting one up, particularly during your lifetime, I would go and see an accountant or a financial advisor to determine in your circumstances whether that's a useful thing to do. But that gives you a sense of what they are and how they work.